We're joined by John Stover, Portfolio Manager at Tribeca Investment Partners. John, thanks for your time.
Thanks for having me.
So you run a fund out of Singapore, global investors, but an Asia-Pac focus. What's the opportunity look like in Asia-Pac for global investors?
Yeah, I think it's a really interesting time for Asia because obviously you had last year China going through its COVID problems. We've seen over the last few months a progressive reopening for China. And at the same time, you're seeing banking issues in the US and Europe with Credit Suisse and Silicon Valley Bank. That's likely going to drive those regions into recession given tightening lending standards. And at the same time, you're seeing this reopening story coming out of China that's really going to drive economic growth in the region for Asia. So, you don't have to just be invested in China to play that rebound. You can actually be invested in some of the other countries within Asia that are going to be able to export to China, for instance, and that's really going to drive a lot of the growth in this region. So we're finding a lot of interesting opportunities, whether it's in some cases in China, but we actually do a lot more outside of China than we do inside of China. China's a pretty small part of our portfolio, but we're seeing a lot of interesting things to do across Southeast Asia, for instance, Australia. And there's actually a lot of exciting companies this week that are presenting as well as a part of that.
So historically, if I went back 3 or 4 years, where would most of the funds be deployed?
We have a really broad focus in Asia Pacific. So obviously we're investing 100% in this region, but compared to our peers, a lot of which in some cases we're 50, 60% in China if they're an Asia fund. We've always been taken a much more diversified approach to the region. So we've had roughly 25% in Southeast Asia, 25% Australia, 10 to 15% in India, and in North Asia, roughly 10 to 15%. We also invest in some of the more periphery countries. Vietnam, we found interesting things to do recently. That country is going through a real growth spurt as a lot of manufacturing has been moved from China to Vietnam, given some of the geopolitical concerns and the lower labor costs in that country, Mongolia, et cetera. So we try to take a diversified approach.
So I want to talk about opportunity. So when you look as a fund manager looking across the board of Asia-Pac for opportunities, what are the things that pique your interest?
Yeah, well, I think some of the things that we're seeing at this conference here, I would say Indonesia, for instance, is really exciting for us because obviously traditionally it was seen as just a natural resource exporter, but the country is increasingly moving downstream. So this nickel and cobalt processing value chain that's built out, there's been tens of billions of dollars of investment that have gone into the industrial parks there that's really fixed the sovereign credit in the current account. So that's been a huge driver that I don't think many people are focused on. It's moved the current account from a deficit to a surplus just with those trade flows. And so that, I think, has set up the country really well to withstand some of the pressures that you typically see on emerging markets from a global recession and for dollar strength and rising interest rates. And they're increasingly going downstream into the battery manufacturing, potentially electric vehicle manufacturing. So we find a lot of interesting opportunities in Indonesia. Australia, again, we're finding a lot of interesting things to do, just mainly in the resources space. A lot of the companies that are presenting this week, whether in the battery material value chain, you hear them, everyone's sort of talking the same story about the demand side of things, and obviously everyone knows there's a huge coming boom from electrification, but a lot of the stories we're hearing this week is, look, it's difficult to get permits, it's difficult to get funding, even though everyone knows this huge demand boom is coming. So if you can pick the right projects, the right companies, and actually create your own outcome by giving them financing to get the project up and running, that's actually really interesting for us because a lot of these companies are trading at a huge discount to their NPVs once the project's up and running, often at 0.3, 0.4 times. So if you can be the catalyst to get the project up and running with the financing, you can say 2, 3, 4x your money on the back of that.
Just touching on that, how important is it when looking at an investment to determine whether you can be the catalyst?
Yeah, well, in some cases, we're passive minority shareholders, right? And the company's well financed, and we trust the management, and we're sort of along for the ride. We love the story, of course. We give our feedback, but a lot of times we're just looking for the right people to invest in. But in some cases, we can play a greater role. And actually, at Tribeca, we do public equity investing. We also do liquid credit. We do a lot of that in the Asia Pacific region. It's a really interesting space, and in my fund, focuses on that as well. We also do direct lending. So we directly lend to corporates in the natural resources space, for instance. We do a lot of that in Australia, and I think in that sense, we can be both an investor and a partner, and really help these companies come into production. We have geophysicists on staff. We have people with a lot of banking experience directly lending to corporates. So yeah, we feel like we're a strong partner in that regard.
Fast forward 5 years. What do you think the fund will be focused on, and where do you think the opportunities will come from that we aren't even seeing yet?
Yeah, sure. Well, I think first and foremost, you just have to be ready for what comes, right? I mean, often I think we're going to focus on one particular country or sector, and then 2 weeks later, there's some issue that happens in the market that creates this big opportunity in something totally different. So we like to stay nimble. We like to stay liquid and be able to catch the opportunities as they come. But as I see geopolitics evolve, and I think trade flows shift, I think Southeast Asia is certainly going to be a very important space for us and continue to be. India also. I think the secular trends in those geographies are not changing. Australia is going to continue to be a focus, and given both our boots on the ground approach there, what we're seeing in the natural resources sector, it's a bit more insulated from the banking issues that we're seeing in other regions. And China, is going to continue to have a lot of interesting things to do. It's a huge country. You can't just ignore it if you're an Asian investor, right? You have to be smart about it, and we're not going into the sectors that are distressed or there's risks around that. But look, there's really interesting things in China in the internet space, in the consumer space, all natural resources, industrials, and I think those are just going to get an even bigger tailwind from what we're seeing from the reopening story, which really, the economic growth numbers are really coming through for China. You see some of the PMI numbers over the past several weeks. Construction is coming back. Mobility data we're seeing in real time has come back. So the markets can kind of fluctuate like this, but we are actually seeing the data support the reopening thematic.
Strong tailwinds, always able to identify opportunities, a great track record in Southeast Asia. Wish you every success, John. Thanks for your time.
Thanks very much. Appreciate it.